Good morning, my friends, and welcome to the Breakfast Club. My name's Darren Hancock, and we are here on Thursday, the 15th of February. And this was the... Let's not rush into it, shall we? I'll talk about this in a second. What happened here? Let me just make sure that we're up and running and we are live. There we are. There we are. And we're first up. Kirk is not here. I'm the first one here today. All right. So let's go into a quick lowdown of what's going on here, where we think this could go. So when we had this open this morning, this news 9 or 8:30 news release, see this little bip down? The bip down, that kind of tells you where it's going. Then it draws everybody in. We did the same trade yesterday. Same trade, open trades down, runs back up, takes all these people in thinking it's going long, takes out a bunch of highs, then reverses below the low. This is the direction it was pointing. This is just to trail people in for a loss, thinking we're going to head for old highs, or that's just the Judas swing. Then it comes back in and takes out all these people who are going short here, and all these long players just got all taken out here. I love that. Love it, love it. So it did the same thing as it did yesterday. Top of the daily fair value gap on the S&P 500. Tyree, good morning. I should have started up a little session last night. I was thinking about you last night while I was doing this. I woke up, I had a nightmare last night. Woke up about 4 hours ago. 3 hours. 4 hours ago. And came downstairs here and I thought I'll do some trading. And I did a couple of trades on the London Open, or London midnight candle, London high as it were, we're after. So turned out all right. We got a couple of trades in there. Kirk, good morning. I beat you in here this morning, Kirk. So we've already come down to this objective here. We're back inside here. We're between these two candles right now. So I do like the idea of this is pushing down further. So this may be the swing high that we're expecting, just to return back to this consolidation here from a few days ago. We've got some Anas. Welcome, my friend. I'm jealous. Do you think about me? Kirk, as soon as I come here in the morning, my friend, you're the first thing on my mind. I wake up to my little smile and think, oh, Kirk will be there first thing in the morning. Now you got competition. Tyree's already awake. He's already had half his day started. Yeah, so more downside. If this is the swing for the day, we'll keep an eye between this candle here and this candle here for a rundown. I'm still expecting further downside prices. This is the swing that started off the morning in the 8:30 news release. See the bip down, ran out, took everybody in, and then headed down. Not 100%, not 100%, but it's very interesting how it does that in the morning. It says, I'm going this way, but I'm going to take everybody else out first, take out, look for our most recent high, and then all these fair value gap that we can get into, obviously a consolidation that we can return to, and then book it down. So we've got a few new people that'll be popping in today, I'm sure, or we'll pick this up a little bit later. I've been kind of jumping around to some of these Facebook channels and inviting people to pop by. We're going to get a lot of retail people in here, people that haven't studied the ICT stuff. But hopefully, if they stick around long enough, they'll see some amazing things that we're able to do, we're able to see here in these charts. And you guys can help them out as well. Let me get it to NQ here. I was looking at some, oh, it didn't quite hit the high there. So we might be just coming back into this order block or this session open and then running this one more time for this high. If we don't, then look for this mean threshold of this down close candle to be the level of support, or if we blow through it on a close, then look for this stuff down here. We look for this as a potential turn. See, it's ran its low now, took its highs out, reversed, took out the lows now. Now let's go into some, oh, that was NQ again, wasn't it? Oh, I wanted to get into Dow Jones, give you guys a little idea what Dow Jones is looking like. I'm liking this consequent encroachment of the SIBI. Should put you right in off the bottom of this candle here. We look for these equal lows to obviously to provide a level of support. Right now we're getting that classic stepping pattern. We're back into the order blocks. We have chewed through them though, and we're into this one here. Mean threshold. One more time. Order block. We can come back into this one here. We're getting a stepping thing moving up here on the 15-minute chart. Oh no, that's the 4-hour chart, sorry. Let's do, I like this setup better. Let me just change this around. Where is that setup? I'm looking for this one on this side. Am I missing it? Is it staring me in the face? Maybe it's this one only. Yeah. We'll turn this one into 1 hour, turn this one into a 15, we'll turn this one into a 1. That'll give us a good idea of what range we're in, presently sitting in. %. We're definitely in the premium array, which is this guy here. All right, let's go into Dixie. Have a look at that real quick. I've got nothing that's super sexy right now. Okay, we've got back into this order block here. I like this for a potential fill. Back to this order block here, and then we're going to continue to ramp up. Look for a run back into the 1 hour fair value gap, and then the bottom of the daily. See how we broke through that again? Look for this fair value gap here to provide support. So if we bang around in here for a little bit, or if we pop out of it, look for support at the top and then continue to the upside as we dig into this daily fair value gap above us. some more. So here's the whole equal highs right here on the hourly. So it looks like we're pretty close to tapping that already. So if we tap this, we come down a little bit more. I don't want to see it fill in. I'd like to see it just come back into here, because we don't have a leg that takes out this consolidation. Remember, if we have a leg that takes out the consolidation, we run up. If we're looking for more upside, then it's either the top of the consolidation, the midpoint of the consolidation, or 50% of the leg that takes out the low as the reversal points. And if we lose the 50% of the leg that takes out the low, then you're looking at a run down below this, obviously. You'll see. Those who are new here, you'll see. We'll find you something. You'll start to see some really clear, clean price action. What about the daily inversion fair value gap for a short? Oh, nice. And sorry for the nightmare, but at least you made some money. I trade currencies during London. I didn't get anything, but I enjoyed reading price candle by candle on the 1 minute. I can see the market a bit clearer now. Well, that's good. I'm glad you see that, Tyree. Good morning, TK. Did you close the longs? Yeah, I trailed the stop loss up. They came down and took my stop, but I trailed it up into profit before I went to sleep, because I know if I wouldn't have, then I wouldn't have slept anyway. I would have been worrying about the trade, thinking about the trade. So moving it to in stress-free zone is always a nice way to go back to bed. That way you know, either way I've made some money. Okay, so let's move along here. So we're expecting a little bit more downside and then an upside movement we're inside this fair value gap right now. So how we act inside here is going to let us know whether or not we're just going to be banging around in here today, going sideways. This could be the consolidation, run down, break up above, come back to it, and then continue through to take out the old highs here. We'll wait for the open at 9:30, another 15 minutes. We'll see what happens. We'll see what we get inside here, and we'll see how we get, what kind of reaction we get off this consolidation here. What do we got in here? A lot of equal lows down here. This inversion over here. This is the daily chart. So we've had the rejection block hit already. Let me get this out of here, clean this up a little bit. Love that reaction off of that breaker. Look at that, right off the body. Boom, right back to the rejection block. Order block, break down below it, come back into it right here nicely. Old lows. So we could be rolling over here and coming back down into these lows here. So that tells me we have more upside on the American dollar, more downside on the British pound. We're back into that order block right now. And this is probably a 4 hour, is it? Let's just put this where it's supposed to be. That's a 4 hour daily fair value gap. We're going to do this as a 4 hour. It's now an inversion. It's providing support. And yes, those of you who are from our retail, we cut through candles. And it does look like we're just form-fitting stuff, but you'll see. Hang in there, you'll see. everything's hindsight, right? Where hindsight is where you build your knowledge base. Just stick around long enough to see what it is that we're doing, and you'll get a feel for the logic of it. So this 4-hour inversion is coming back holding price. So if the American dollar continues up, then this should reverse here, and we should see support below it. And if it continues to the upside, look for here and then eventually up there. But right now this inversion is providing a level of support. Nice good down close candle through that, back up inside it. How we act inside here now in the next 4 hours on that candle is going to be interesting. CAD all the way back to the daily fair value gap, find some support off of that and continue back up. So on the daily we have more downside for that. Which is interesting because if the American dollar gets stronger, this price should continue up. So yeah, it still feels like it's going to come back into this daily fair value gap inversion here. Oh, although we have one right here as well. Yeah, feels like there's potential for, we've got the midpoint. Mean threshold's about here. So I think we have a return to this. We'll keep an eye on this today and see where that ends up. But I like yeah, look for this return to the daily fair value gap high. If that leaves this open, we're back to that hourly thing we talked about right there. See that? Here's your consolidation. Return to the old high. We just finished having this discussion, so right here, and then see if we get a reaction off of that. So looking for more downside on that today. New Zealand dollar still in its consolidation. Right now you're between that mean threshold of this candle and the mean threshold of this candle. See how the bodies of the candles are respecting it, and the wick is respecting this one. Obviously the fair value gap has now been filled. Now we're still looking for, are we going to find some support on top of this to get upside, or are we just going to roll over and come back down into this 4-hour breaker? We're getting a good reaction off that still, and that's from way back here. That's October's breaker is providing a support. Aussie dollar's broken down some more. Obviously, this inversion here now is, we've traded through that. We have a body just short of that. Body closes up above, tap down. So look for a run above here, back into this candle, and potentially this low here of this daily inversion, or this candle here. I'm rushing ahead here. This candle here has the mean threshold still being respected, so we're going to see how it acts inside this little fair value gap here. Now you want to see this close above here and then continue up. That's on the daily. We finally ran through our objective for the British or the Japanese yen. Today we've returned to the old high, filled the fair value gap. Now if we get a snap back This will coincide with more strength on the American dollar, so we should see a rise in this, looking for these equal highs up here now. Oil, equal lows, return to upside. We've got this guy here, so you got the low, the open, and the mean threshold. We still have those. Let me unlock this, move it over a bit more, unlock that up. So look for this, also this imbalance as you come through here. I like that whole open to low of these two, of this candle here and this candle's close and its high creates a little imbalance. So we're looking for a return to 1, 2, 3, and then eventually this daily fair value gap inversion there. And then we could see either a reaction off of that and come back down into this fair value gap below us. This candle's not valid yet, so we're not worried about that. We're literally keying off this candle here. These are all up close candles with an invalid order block that we haven't, it's not in part of the game yet, as it were. So I'm looking for a little bit more upside on oil. Gold reacted nicely off the fair value gap. Now, what do we want to see with gold? Look at this little consolidation here. We run up above the consolidation. Bold leg goes up. Now we want to see it come back down or create a fair value gap. Ideally, another fair value gap right here would be nice for the hourly. Come back in, tap this old daily fair value gap high, which would be the top of the consolidation, and then start riding back up. So I'm looking for a retracement and then like this to turn into a fair value gap for the hourly. So we should see this stay open here. Next candle opened down. You have the 3 points of entry, one here, the midpoint, and the close. Also the old highs back here. And then run upside through here. Doesn't make sense when you consider that gold's price goes up when the American dollar goes down. So hold another narrative where we have this fair value gap. We have to lose this fair value gap to the upside to get further upside prices. Right now, if the American dollar continues to go up, this is our run down into this fair value gap here. And then you'd have to look at what's the next hour have in store. The next couple of hours, what do they have in store for the Dixie? And banks, you guys aren't into banks. I haven't had anybody request banks at our Canadian ETFs, dividend funds. I'm all out of those. I'm expecting a retracement, so I've taken mine out at the highs. I took mine out over here. This one I got out right in here, so this one's up still a little bit. I got out of this one up here. So we're looking for a retracement back into here, into February. And that February-March retracement back into this, and then I'm going to get in long again on those. Looking for this run on this liquidity below price here. There's a gap down here. I got out way up about here. I missed this one. I got watching this a little too late. Got out in here on the retracement. And these are all paying double digits in dividends. So they pay great dividends. So you imagine if you catch nice and low and make a nice dividend run up, you get a nice principal increase plus the dividend. It's awesome. Anyway, let's get back to the main show, which is Consolidation Central, which is good. I like seeing consolidations. Oh, we've had some chat. Good morning. Did you close the long? Yes, Southie, good morning. And Abs, welcome, my friend. Welcome, welcome. We have 4 more minutes. 4 more minutes. Apparently, according to the analytics, this is when people start to pop into the show. Most frequently is for the 9:30 open. So what do you guys want to see in this? Do you want to see consolidation, run up, break down, consolidation, break down, run up? What's in your wheelhouse today? What are you looking for? Kirk, my friend, where are you going? What do you think what's your feel for where this is heading? We don't have Derek in here yet this morning. It is definitely not a fun zone to be in, getting beat up in here. I'm going to show you, I've promised the people that I went to these other sites to see and say, look, I can read the 1 minute chart here, minute by minute, I'll show you. And I'm not just going to show you in hindsight, because anybody can do that, right? Okay, so we're extending past this range here. Look for this candle here on the hourly. It's our level of support, so we're looking for mean threshold right here. On the 15-minute candle, you're looking for this fair value gap down here in Asia. So we're returning to the Asian high right now. So consolidation, run up, come back, tag it, run up, take the highs out one more time, tag it on the 15-minute. So we have all these little wicks down here. We have no bodies breaking this. And those of you who are new watching this, we always like to see a body of a candle take the lows, not these little cheap shots. These are like little stabs to steal liquidity. They haven't got a decent run would be hey, I'm heading down this way. This quick little snap in here to run back up and engineer some liquidity above. So retail might be looking at this going, look at this nice ceiling here, nice place to find some support. We're probing this, we want to go down there, right? But we haven't got a body down there yet, so all these are just raids on liquidity. See that? And then come back up, engineer some more, raid on liquidity, engineer some more. Then when they're ready, they'll slam it up into here. We've got an open fair value gap here. We're looking at a premium discount range. %50 puts us on a perfect fill there. See that? So I'd like to see this hold, that take out a 50%, and then we'll see what happens here. Because we have this inversion, that imbalance that we still haven't, we just tapped the edge of it. We still haven't got these two, so I like those for potential upside runs for deep retracement. And so now we're just running the liquidity above. Let's see, we snipe below, snipe above. Watch the 50. And then you want to see it slam right through this, because now we're looking for this to become inversion, and again sniper raid, wicks, pull back into the consolidation. So you're cleaning all these guys out. This shakes off a lot of people. So if you're short and your stop loss is sitting above here, you just got taken. If you're long, your stop loss keeps getting taken and they're cleaning out both sides of the market, and then people pile in again to go long or short. They're engineering liquidity on both sides of the market here. So wait. We just wait. You don't try to get in on this. You don't look for any magic bullets. It's a 9:30 now. This is the open. 27.29. This looks like a nice. Now, time and price. You'll start to hear me talk about specific times where I expect turns to happen. Here, 30.32. Crazy Ivan inside the consolidation. So expect the next few. It's easy to say there's going to be a swing point because there's a million of them in here. Not a million, that's exaggeration. Obviously there's a couple of dozen of them in here. Sniper run. Now you're coming back into here now. So just popping above 50% will fill this. That's a premium level. So we've had nothing to show us a nice breakout yet, which is fine. And we don't go chasing after this. If we get a big ripping candle down here, you don't go, oh no, I missed it. No, you don't. It's just tipping its hand, showing you where it wants to go. Then we wait for the entry. We look for the data point it wants to come back to for allow us to get in. And if we miss it, we're not worried. There'll be at least 2 or 3 more in the next hour. Every hour, or there's at least about 1 or 2 decent entries you can take. This is not a mosquito hunt. You're not slapping at everything you see. So just look for this high to get taken here. That one there. Watch for these little guys here. I'll mention them again. They're not out of the wheelhouse as a points of entry or reaching for. See, a lot of people will be looking at this going, oh, pile on. It's a nice big bold candle. Then it snaps back and gives you a wick. Or it continues down, which is fine. Look for that order block. We're right at that order block now. So what do? Do you start trading short? Do you buy into this and go short? Or do you just now hit that order block nicely and we turn around and start driving up higher? That's why you don't go chasing after price until you get something that can give you a little more definitive response. Mean threshold. Just hit the mean threshold now. Does this hold price or do we give it up? Now you want to see it close down here below this. There's the mean threshold of that candle, and it's also the low or the high of that fair value gap right there. See that? Just tapped it nicely. Now start driving into it. That's a good thing. That'll give us an indication that we've got a nice consolidation leg. Now I don't want this to just be the leg that sweeps, comes back up. It which it doesn't look like it is now. It looks like it's definitely coming down. Now some of you who are chasing that say, I knew it. See, that's why I'm chasing it. I knew it was doing that. Okay. If you're chasing it and you're looking at that order block there, the moment it broke it and you come back into it and you went short there, bless you. Good luck. So we have a displacement here on the hourly to the downside. We have a pool of liquidity. Oh, it smells carrot. That's what it was. It smelled carrot. Yeah, it's up and on. Hey D, are you going to be sticking to your weekly long projection? And Tuesday was just a retracement? Oh, like this one over here, you mean? Am I still going for that guy up there? Yeah. If we take out this low, then I'm wrong. That's not the objective. But we could come all the way back into here. We could drop another 700 handles, and I'd be all right with that for the next couple of weeks, and then find some lift from there. This would be a really sloppy kind of a price leg. And then this is up into May. I'm anticipating this around May. But again, this is just a potential projection. It's not a definite. Short term, we still got the lick 'em stick 'em dude here, a happy dude. We're looking for that as an upside. But don't forget, January or February into March, there tends to be a seasonal tendency for a retracement. So that's what this kind of thing here. If you're looking at that kind of thing happening here, we should get these lows taken out and a return to this old high back here, because we haven't hit it and this fair value gap hasn't been filled in yet. We want to see this one remain open though. Just tap it, and then, but you could have, right now we're between this. Let me make this bigger because you guys are probably squinting your eyes to see this. On the weekly, the same thing as what we're watching on the daily, right? On the weekly, we're between this candle's mean threshold right now, which we've just about to hit today, or we just hit it, and this candle here. So we're really between these two candles in terms of the swing points. We're in the premium portion of the weekly ranges from January 31st week right here. So if we start digging down into, sorry, that's daily. Daily, if we continue down, yeah, this could be back to old highs. Is that what I said? Let me zoom out on that a bit more. Back to this old high here, yeah. There's this gap down here. Don't know if it wanted to get down that far, more like here. Was this the one we was talking to? Yeah, this is the launch point. So return to here. I don't want to see this order block get taken, but if it does, that old high there, if that whole old high gets taken and we start to really dig down into here, then I start to lose faith in the that projection for the price leg up. So I really want to see this hold, and I start to lose it after here. That inversion or that fair value gap right here, if I drew that out, see, we come back to the midpoint of it and leave. So that is the line in the sand, really, or this whole inversion. Wow, it's not really an inversion yet. It's just a fair value gap, but If we come back, revisit this, dig into here, that sucker there is the one I want to see hold price, whether we dip all the way into the bottom of it, which isn't nice, or come back to the top of it and then start to head back up. I'm all right with any of those scenarios for that kind of retracement. I just don't want to lose the bottom of it. I'd like to see that stay open, and that breaker right here to hold price. So that's what I'm expecting for a seasonal tendency. And if it doesn't, if this is it right here, if that's the swing low and we start pushing higher, hey, I'm happy for that too. We can trade any direction. We're still looking for more upside. Right now it's definitely bullish. But the seasonal tendency, if I was expecting a big dip down like this, I'd expect something into this fair value gap again. I hope that answers your question there, Abs. ES and Dow are going higher. Yeah, they've come back into that. This is what we mentioned right at the beginning of the show, is the seasonal season open, session open. Return to that. Order blocks. Fair value gap fill. Nice. And now we've got a nice snap back there on the hourly chart. That's nice. So don't forget, you're still inside this guy here though. You've got to this guy and that guy. So those are the two I was talking about, and we've come back to them. Found some support at it. Now we're popping up. So what you want to do is you want to see this mean threshold lose, give way, and then start running for that high. Otherwise you're still inside the daily fair value gap and you just got some wick running. So keep your powder dry. Wait for a decent entry. Unless you're in on something that I don't see. And you're catching a sniper run, because look, you got lots of little pools of liquidity here, hey? Here, here, inside that range. We've rolled over. That candle is being supported. That little price imbalance right here is now being supported. So you want to see how to drive through it, get on top. That's filled. See that? Nice, beautiful action. I love it. Now wait for this candle to break the low. Otherwise it's consolidation. You want to see this candle turn into something that we can use with a body. There you go. You want to see a body get below that now. Wait for 30 seconds. You don't want it to be a wick. That's good. That's what you want to see. Beautiful. Keep your eyes on those little pockets of liquidity. So draw your fib tool from here to here. Look for your discount array. There we go. Now look for this little pocket here. Let me just show you your premium and discount so you guys are seeing what I'm talking about. There's your 50%. Look at that, right on the money. Now if we dig deeper, what else we got at 62%? We've got this fair value gap. We also have the breaker that sets this whole run up above these highs. So expect a level of support here in this area, and this, you can add these two together if you like for a 2-minute breaker for a run above these highs. Order block, body. You don't want to see it start driving through the mean threshold of this candle. If it does, then this was just a run on the 50% and then start driving higher. We'll see where that candle closes in the next 9 seconds. If you don't lose them, don't close above the mean threshold, then this could be just a reprice, rebalance, come all the way back down again and hit here. Keep your eye on that candle. This one's not valid yet. The only upside or down close candle that we can key off of right now is this guy. Right here. All the rest of them are bull candles, and we're underneath them. The more, every time we stay underneath these bull candles, you've got downside run. Now, if we lose the midpoint on that, look, this has now been validated. So now we have another down close candle that we've got above, and we've got it above the mean threshold of this candle. So now we're looking for upside. Here's your fair value gap. Nice. Body close above that would be nice. You got to switch it up now. And you want to drive for this fair value gap fill up here. Consolidation. Ooh. Consolidation. Price leg that takes out the consolidation. Good. Upside. See that? Consolidation. Leg that takes out the consolidation. We return to the consolidation and leave. So we have the high, the middle, and the 50% of the leg that takes out the consolidation. So those are your levels. High, low. So 50% of that, we never hit it. Take the tops, run those. So you got entry level 1, and I mentioned this morning, the high, the middle, and then 50% of the leg that takes out the consolidation. We take out the high, and we're heading back up. Rinse and repeat, folks. Rinse and repeat. So here's a nice little spooling of the algo that's about to happen. The macro is about to begin right off of here. That might be even worth taking a long on that. Body goes above. Trade back into this. We can get a nice little long right there. And we'll put a stop loss down there. Could even put another one on there. Now this macro should start to spool, and if we're going to spool, where would we like to spool to? That old high and up there. Did you guys see the logic of this run now? Thanks for this, NS. That was an awesome little entry right there. Consolidation, break above. That's all positive upside for me. Return to, creates a fair value gap just above. That's an entry right there for a long. So good call, NS. Good call, buddy. I think you've helped a lot of people out this morning. If you all saw the same thing I just did, that's a good call. I'm not going to take a loss on it, so I'm just going to move my profits. Get ready for that that high. It's probably going to come back and take me out just to piss me off now. I have run that a little too tight. I should just put it down here. It's $37 if I get the low taken. And we could revisit this. This is what Michael's been talking about in the past. If you run your stop loss up too fast behind this, we can revisit it here. So let me just show you that may happen. So we want to see this order block hold price now. So if it comes back one more time, it digs in here. And then you get the mean threshold. Those are also prices they can reach for. See that? Reaching back into it one more time. Okay, take me out. No mean threshold. Now if it snaps off of here and runs back up again, I'll wait till it gets on top of that inversion there. Body closed right on it. Look at that. See, there's one of those ones where if you have an inversion and we close right on it, it didn't break our rule. Then all of a sudden opened and just drove right through everything. That's one of those ones where you go, oh well, you got me. You legitimately got me. That was a decent. This is the second time we've been caught like that. But it's a legitimate entry, for sure. It's a legitimate entry. Now, where could we have taken out rejection block? We did not get the hold highs there. See that? Rejection block. How many times have I preached that damn thing? That's all right. That's a legitimate hit. I'll take it. So the revisit, right on the close, the wick down, do the damage, then you're expecting it to take off from there, and it just, that was the clincher right there. So this little pocket of liquidity down here still. We had this, we still got this one down here we dipped into. Remember the breaker we talked about? I mentioned the breaker. And here we are, return to it. Now I wonder if we took the long here, if this was the, I'm going to put my stop down there. I like the breaker idea now. Now you can do a little run up. I want to see this fair value gap give way now. I don't want to revisit. We could come down and tap that one more time, I suppose. I don't want to lose the mean threshold. If I do, yeah, I don't want to lose the mean threshold of that candle now. Look at the 50%. Oh yeah, 50% of the, stay focused here. 50% of this is your next entry, right there. Where's my stop loss? I'll put another long there. And I'll put my stop loss down here. I gotta start trusting my PD arrays. So the other one, remember we're mentioning number 1 was there. You could have taken some pips out of that. Number 2 is 50% of the consolidation. So let's do 50% of the consolidation. I just want you guys to see where this, the logic abounds here. Template, equilibrium. There's 50%. See right there? Sensitivity off of it, right? And then the last one is down here, 50% of that leg. If you lose that, then we're heading for the lows. And I'm wrong. But those are 3 different points of entry you could take. And 10 o'clock. This could be one of those 10 o'clock takes out the 9:30 low. Crap. Yeah. I'm going to trust it. I'm just going to have to try and trust it. If it takes the 10:30 low out and then does the reversal, I have to go with the PD arrays that I've outlined here. We're about to hit 10 o'clock. Here's 10. Imbalance. See how we're snapping off of that? Now I want all of my stop losses to come up to here. Let me close this guy out. Cancel that. I don't want to see it come back by lower than this guy now. Right back to the order block. See that? Tap it. Now you want to see a nice snap off of that. Nicely. Now if you clear that high, I'm going to move to break even because then it shouldn't be revisiting down here again. And we're looking for this up here. We're inside this range here right now. We've got a nice discount inside this range off of a level that we look for potential support. I got in a touch early. It wasn't until after I got in I was looking, oh yeah, we've got those other two arrays there still. So look for a breaker. I got to take this out here just because we're in a consolidation, so I got to take it out at a breaker here. That'll recoup whatever little loss I took in here. Or I could just move that to break. 12 bucks. Imbalance. Inversion. We've got a body above it. Let me start drawing out things here so you guys can see these. Body breaks above. We trade all the way back to the bottom of it. Now we're not off the top of it. Now you want to really start seeing it get some legs here. Let's hit the breaker, and I didn't take it off, so let me get ready to close that out. I didn't take it out right at the breaker there. Look at that. See, it tagged it perfectly. Now it's going to come and take me out. I said I was going to take it out there. Right. Now that's precision exit, but clearly I didn't get it. 12 bucks. A pace for your trade. I'm getting out of here. We're going to wait now. So breaker to breaker trade now. Like array to like array. Inside this range. I should have just put the sell. I keep forgetting to use this thing. Clicking that and putting that sell order in there. That way, if it touches it, it can take me out. And whatever. Breaker. Inside this breaker here. You see this? This is where we're sitting right now. So the bodies of the candles are respecting this breaker right here. The wicks do some damage, but the bodies are respecting that. So if we come into 50% of this, or this little fair value gap down here one more time, I'll get one more long there for this. So we'll go fair value gap discount to fair value gap premium. You're free now. You're off work, are you, Furba? So let's line these up. That's the breaker. So let me just turn that into a breaker so we know what the hell we're looking at. Breaker. We have a little time. If this guy gives way, we got this here, and you want to see it blow right through it to get back up here. This is when you're in consolidation. It's fun to try and call this in a consolidation. You shouldn't be trading in this mess. You want much more cleaner price action, but I do like the these two guys right here. We're bashing around in the premium. We go from premium to discount to premium again. Back to discount, run back up to premium, just pop into that mean threshold of that candle, then come all the way back down into this dude down here. This is a valid order block now. We have inversion. We've gone through it on the upside, tapped it, hit the premium array, come through it on the downside, tap the premium array or the discount array, run back up through it again, and now we're hitting that upside premium inversion or fair value gap, not inversion yet. See how we're tapping it? There's your little price imbalance there as well. So we're hitting the top of the price imbalance. Are these areas of sensitivity? Dang rights they are. This is not randomness, folks. These are PD arrays. Now, you may say, that's way too messy. I'm not playing in that area. That's fine. Who wants to play in this area? But if you study this and you look at logical levels that the algorithm will run to, this starts to become a lot clearer and the noise starts to become a little more Aerosmith, man, starts to make sense. Look at that. Nice little place to have a reaction off of here, right? Also a breaker again. We hit the edge of it. Now we hit the body of it, which is also in line with the mean threshold. Right there. See how it's sitting flat on it? It's not reacting off it. Then it tells me you got a potential pop up some more. You want to see it snap off of that thing. Just hit it and boom. The fact that it's hovering here just tells me it wants to go for another little pump, maybe up into this last 1 minute breaker. Imbalance. A little order block that we want to find some support on. Look for this to fill now. Now if we get this fill, this would be a nice place here to turn around. We'll see if it snaps off of here, starts to come back. Look for this discount array. So we're calling for this one to come fill. Now we're looking for this one to fill. Watch the mean threshold. If we lose the mean threshold, then that theory is gone for now, and we'll look for rejection block and further upside. We want to close. Look at that, we're closing right on it. Open on it. Still in the mean threshold. Wicks can do the damage, so we wait and see what happens with the close of that candle. And we make sure that this is actually snapped onto the area. That, see how it's literally closed on it? I don't have a rule for closing on it. There's your rejection block. You have 20 seconds. This is when you start to say, I'm aiming for this high, and you don't quite get the high yet. You just get the rejection. Then it comes all the way back down to a discount, and then eventually starts to run back up there. This big candle here is definitely in play now. So we closed above it. Good point. Come back down, tag it. Now some people might say, I'm going long on that. Well, you're paying a premium to run an array that's really close to you here. So is that your entry? It's up to you. Maybe come back and fill this candle here, this wick, to the mean threshold to go long. Or did it just do what we were saying? Come into the rejection block, doesn't give you your high. Wants to come back down here first. Give you that false sense of, I just got taken in at a premium array. That's why Derek likes to get his discount arrays. Wait for a discount. When you're in a range like this, wait for a discount. So see, we already blew through that wick right there. And we may be heading right back. Keep your eye up down here. Order block's now valid with a body. And we have a little fair value gap. Now, this becomes a little inversion. So keep your eye on that one. But the new one that's forming is right here. See that right there? The body is respecting it. That's the fair value gap. We want to see a body get through it, come back to it, and continue down. So we'll see where this candle closes. Don't forget this order block here. We can come back, hit that again, which is the top of this new fair value gap right here. Hit the top of that, validate that order blocks already, tap it, turn around and come back down. If we blow through the midpoint of it, then this is the support, that big one that we're talking about right there. We've come all the way back down, find support off of that, and then push through higher. And that becomes the stepping stone. You see what I'm saying? And see how they're opening and closing right on that candle and that inversion. So wait and see again. Lose the mean threshold. This would be the really frustrating thing. If you keep wanting to go long here, then it just turns around and comes all the way back down into a nice little discount array that's been waiting for it down here. And then you go, oh, damn, look, I got beat up in that huge, I'm inside this range here still. And you're inside the premium of that range. And yes, you are finding some support, but we want to make sure that that support is with a big bold candle now. And you want to see this midpoint, it gave way. We closed above, but then we came right back into it. We're off that mean consequent encroachment of this SIBI here. So you think, okay, good. Now, have we got another candle that comes back and finds support on it? No, we wicked up. Now we keep opening and closing on these, the high of that inversion. So now this is a valid order block. Consolidations, hey? They're literally, the PD arrays, you're bouncing around inside them. If you're keying off of here, good for you. Like, you got balls of steel if you start saying, I'm absolutely confident that's going to give me support. Inside all this messy consolidation, inside this range, you're even inside this little range right here right now. So all these little probes up here, nothing's telling me that that's going to launch out of here right now. Let's just probe. If it rolls over and comes down from here, it wouldn't surprise me at all. But again, the rule is now we've closed above, good. Come back down, tap it, react off of it. Good. Now start climbing. It's probably, maybe it's a little upset because the carrot's not around. Like it's wandering around here because it has no carrot. Let's wait for it to smoothen out a little bit before we decide to feed this sucker. Oh, we're on the E-mini S&P. Yeah, why aren't we doing the NASDAQ? Jesus, let's get over to NASDAQ. Let's look something sexy. There you go. Thanks, Ferba. Right back to the level we're pointing out. Drop down to there. We lost the mean threshold. See that? Blew right through it. Boom. Come back to it. Now that becomes the breaker for that run up. Hit it. Now we want to see a nice little reaction off here and start coming back down. This one's a little cleaner than the S&P right now. Holy smokes. Equal lows sitting right here. You don't want to see that high get taken out right there. 17.8 76. Wicking through is fine. This is good. Breaker, really nice. Wick through. Start climbing down now. Yeah, that's a nice little place to respond off of there. Now you want to see this inversion hold. And what are we sitting at? 17? 10. Was that your silver bullet right there at 9? Here to go up higher. Who took this as a silver bullet? You're going to see this close below here now. Right there. You want to see it close below this here. Mean threshold. Keep this in mind right here. So we wick through it. Now we're pushing higher. Those of you who took that as a silver bullet on the 12, there's the 9, 10, 11, 12 is the takeoff candle. There's your silver bullet. If you took this as your silver bullet, this is why I told you guys about the silver bullet right at 10 o'clock. May not always be the best one, right? There's the 10, 10:02, 10:03. There's a silver bullet there. If you took that for a short now, thinking this is short, then all of a sudden it blasts through. It takes your stop loss, and you go, crap, now we have a body breaking a high. That is a break in market structure right here with a body breaking a high. Break in market structure, come back down to the top of the high, and we leave, creating a fair value gap shortly after that. That's the wick of the hour. Here, return into it. That's your long. Now you're looking for, take your first one off at the rejection block and look for higher prices. Now I want to see this thing, and then here's where you start to say, where's my stop loss? I want to make sure that I'm trailing my stop loss up tight. If this thing if I end up blowing this, for my rule anyway, is if you blow through this on a body, close out. You got this mean threshold here as your line in the sand. Right now it's just, it tapped it right there, drove through it one more time, right near the mean threshold. You want to really start seeing this thing get some legs now and get out of here, because this whole sideways motion is not fun, obviously, to be in. And we've now validated this as an order block, so we've come back inside it already. We've opened on the mean threshold of that candle, traded all the way through it. So this thing's been eaten up. So we went all the way up, validated it, literally chewed through, opened up here, instead of coming back to it here and going higher, probe. So I'm still thinking this is a nice place to turn around and start booking it down. Mind you, we've already hit the top of this. We're inside this fair value gap. We mentioned that earlier today. For this candle, we've got to get through this mean threshold. I like to see a body get through here, create a little fair value act, come back up, find some support off this guy, and start going back down again. All these wicks are doing some damage, so trying to sit in on a trade for this would not be fun. Okay, good. I want a big bold candle. There we go. Lovely. Oh, it smells carrot, that's why. Lovely carrot. I like this down here now. Mean threshold. It held price on the breaker. Breakers are super strong. So why didn't we take the trade? WikiLeaks. All right, so order block. Swing point. Not a breaker. See that? Not a breaker. This is a mitigation block. Unless you call that a swing point there, I suppose. Yeah, I guess technically the definition is if it breaks an old swing point high. So look for it to provide some support here. There's the fair value gap we're asking for. Then what I want to see is it just come right back up, wick through this, tap that, and come back down. So I want to see this close. There you go. That's the fair value gap we're asking for. Look at this driving right up, come right up. I'm going to get short just because I've been calling this. Right there. I've got to try and take one that I'm calling here. I asked for this whole thing to happen. It's happened. Now stop loss. We're going to put the stop loss up here. Now if we get a body close above here, my rule is get out. Wicks do the damage. Close below. Now, technically I don't want to see it take that high again now. We're inside this dude. Got to be careful here. In consolidations, we're in a discount one, premium one. Tap it one more time. Not a good sign. Not a good sign. Again, we wait for the close. And we're still, not a good sign. That's going to take my stop. See, I didn't want to see it hit that one again. Rejection block one more time. No, I don't want it to take that high there. If it takes that high, I'm out. It's about to close above my candle. And what I'd like to see is just kind of get back into here now. And we'll see if we can take some less losses here by seeing how this one, if it doesn't take me out. Ooh, if it comes back into me a little bit here, that'll give me a chance to close my position. Otherwise, I take a full stop loss. See how we've closed above it? Now we're going to cut back my losses. I'll take my loss out there. That's when Derek says, I'm going to stay in. you're thinking it's going to go up, Abs. You may be right, but now we're traded back through that inversion, and we're back into this guy here now. So if that finds some support off that, you're right, we're going up. But I'd still be right if it supports off of here. Hence the reason fair value gaps. Either one of us could be right. Now this is where I sit there and go, look at that. You played chicken with the train. You came up, you polished the headlight on the train, and it came all the way back down again. I love it. Again, no live trades, but we're really trying to dance in here right on top of the logical level. So here, see how we've broken this now? Body closed below it, almost came back and tagged it. We're through this guy here now, and we're still hunting for the carrot. Sorry, Abs, we're still going down. That was literally playing chicken with the train there. But it was my rule, right? It broke the high. If it comes back into it, get me out a little bit. And the little twitch, it popped back up again. It made me flinch right here, so I took a little loss where I could be like laughing right now going, hoo-hoo! Sorry, it was the carrot. It smells carrot. It loves the carrot right here. So this is the part we were talking about on the, I bet you the NASDAQ or the EMNE did the same thing. That little piece that we were looking for, where was it, down here? Down here, see how it's ripping down there now? Oh, mind you, it did take out the highs. So that theory I had that it may not take out the highs, it did. So forget that noise. But it is heading back down to this dude here now. Oh, look at that, right to the carrot. Right to the carrot. All right. Now where does it go? Look for this candle here. There's a little imbalance right here. Order block. And what do we say about consolidations? And I'm going to show this to you guys just so you don't think I'm crack-a-lacking here. I'm going to try this one. I just want to see if this lines up here. It's just, oh, for cripe's sakes. Come on. All right. 50% of the leg that takes out this small little consolidation here. Boom. Reaction off of it. Am I talking out of my butt cheeks here? Hell no. Look at that. Right inside a logical level that you could see it retrace to. Can you smell what the crop is cooking? And now you pull back your 50%, blah, 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 from here to here. If you're looking at that as your, there's 50%. We can get a reaction off that, come back down again. I didn't see that until I was like, oh no. It's a nice logical level. We had the carrot in the right spot, but the logic hit was here, was that big breaker, also is the leg that takes out this small little consolidation we had right here. Rinse and repeat, guys. Same thing. Right there, 50% on the Beezer. Oh, that would have been such a beautiful exit right there. I tell you, getting closer every day. So look for some support off of here. This a little inversion here now. It's in a premium level. This inversion here now. Now we've got a fill of it. The carrot. Heading for the carrot. Oh, poor Miss ODD going up just to come down. Took out 5. Good for you, man. If you took 5 out of that, good for you. Now, where are we looking? We're looking right here. Look at the mean threshold. Look at this candle. Look at the range you're in here. That's a premium range. We also have that little premium dude way back tucked away in here. We have this little guy sitting right in here. We have this little guy right here. So we want to see it come to the carrot back into this dude one more time. Because now we have, let me clone this guy. You'll see what I mean. Look for these logical levels. Premium, discount. Inside this little range here, or inside this bigger range, we have a premium discount. Inside this smaller range, we have a little guy right here. I'm going to move this guy over so you guys can see him. 1 and 2. There's that little guy right there. And don't discount these little guys, because I told you about this. These guys down here, this is the rejection block that you never get the high taken out, the rejection, and you'd be really disappointed if you thought that was going to be the big run all the way through now, and it turned around and came all the way back down to that little area we were talking about. You get beat up. You're like, man, I got in long. I shouldn't have stayed. I should not have stayed long. And here's a nice little example of, oh no, that's the fair value gap that forms. Inversion right here, a little tiny one. Coming for the carrot. And now we want to put the carrot right, I want to put the carrot right there. Now, does this provide a level of support, or do we pop through it, come back up, find some support at it, and continue through now? Now I'm starting to look at something else here, right? Can you guys see it? Can you see it? If we blow through here, we've just come back into that inversion one more time, mean threshold, wicks, consolidations. You do not want to be sitting around in here. You get your ass handed to you if you're not careful. Again, we're waiting for some smooth, we're still calling it, but you got to be really nimble to be playing in this kind of stuff. So you can't deny this one. If we're still inside this range, you're sitting in a discount portion of this whole range right here. And now we're looking for a run back up to a premium inside that range. Well, what premiums do we have? We have this upper half of the fair value gap. That's still premium. Again, let me pull your fib tool so you see what I'm talking about. And let me give you your retracement levels. 62% puts you right on a fill of that. So if we retrace into a premium, also inside that little inversion right there, then run down and take these lows out. Or it would have to take the mean threshold of this candle out, which is also the inversion right here. So right now I'm looking at upside, premium. We've probed it a bunch of times. Big drive through, hit a premium level, then give up the ghost and come back down again. And I'm looking between these two arrays and how they're playing off of one another. We've touched this one. We have not hit this one yet. And that's up at optimum trade entry, 75%, 79% retracement gives you a perfect fill. Okay? So optimum trade entries. Unless we take out, this just rolls over here now and comes back down, which is good because we're looking for something delicious to happen here. It's called the price leg. And again, I'm just, you know how I love these things, but whether or not they're going to be super accurate, I don't know. But look for there, and then the caret will go right there. I'll put the caret right there right now just for the shits and giggles. That's what I like to see unfold. Run to here, and then slowly work its way down into take these lows out. How's that for forecasting? Now, will we get it is the question. Huge SMT between NQ and ES. Okay, so Nasdaq and E-mini. Sherpa, I place a trade and market goes opposite, and then I just guess, but don't place trade, and then it's right. Actually making me, market is playing me. Yeah. It's working, yeah. But look at all these wicks. See, these wicks are, they're just, as our buddy Kirk would say, a little Mike Tyson action. TK says, I'm short from 17,825. 17,825. Oh, you're in the middle of that consolidation? Ooh, Nelly. So you're getting off this inversion here. Like that's, you're hammering around in there. Do you feel like a pinball right now there, TK? So we're back up to that inversion. See how it just slamming off of it? Those of you who are new to the channel, you tell me these are not key data points that the algorithm's bouncing off of. Do you think this is randomness? Stick around. You're going to see some laser accuracy. Once this market starts to smoothen out a little bit, I'm going to show you some crazy shit here. The boys are going to be calling some nutso levels, and they're going to be like bang on. All you new people will be like, ah, you guys are amazing. I agree. We playing with giants. Lori, how you doing, buddy? Morning. Well done. Same here. Oh, Lori's in on the pinball as well. Well, I got to jump in then. If this is where we're thinking, I'm going to go right here for a short. Oops. Crap. There's my idea. I want it to go right there. Come on. Oh wait, they got this guy up here. Let me move him up here. I think it's going to run. That could be the run here now and shoot back down. But I like this guy up here, so I'm going to try waiting for that dude up there. Just the fact that it's not snapping off of it really fast right now. I like that premium array up here, so I'm going to stick my sell order up there and see what happens. Then we want to see it run. If it doesn't, then that first thought of it coming up to here. So far we've called it up to here. I'd like to see it slam down now and give the boys their due. But I like that idea of this little guy sitting right up here. And the stop loss will go right up just above the rejection block. See, we're closing above it now. That's that little tiny pip above. And you ask yourself, do I get out? Do I stay in? There's another little inversion over on this side. So that's like tagged it perfectly on the top of it. This guy right here. So come on down. Give the boys their due. TK and Lori, we want them to have their trade here. So hammer down, man. Hammer down. Aim for the caret. Let me give you a little bit of temptation here for the caret. This was the other 62% retracement running to the caret idea. So we want to see this mean threshold give way here. took a short at 10.10. Oh, we got a short up here. Good for you, buds. This mean threshold, you want to see it give way, not find support at it. Otherwise, it's pushing up higher. So now we're stuck between these two candles, this one and this one. You want to see this one support it to go down and blast through it to come up. And this is the problem with consolidations. You can get beat up in consolidations. Now, does that little trade above throw you off? Because now we're trading below. We've come back in. So here's where you can go, the rule for up, the rule for down. This is supporting rule for down right now instead of the rule for up. But right off that 62% level, you want to see this give way now. Here and here. See, we're hit the mean threshold of one here, and we've hit the mean threshold here. So now it has to extend its array. It has to say, now where am I going? I have to push for higher arrays outside of these two. Very seldom do you see them just hitting them perfectly, square, square, square like that. Not that it can't happen, but now it's running out of arrays. It's going to say, I'm running through all my 1 second ones right now. And I've either got to push higher, or I've got to take this guy out with a full run down into this rejection, or I guess the lowest body down close swing. There's a swing here, so you'd have to take that one down here. I'm with you, Abs. I want to go long. Well, I want it to go long to get mine, but I want to go short because I'm not in this, and I want my guys to get some cash. Be careful here, though, guys. If we lose this, you want to see it eat through here and then start driving down. I'll tempt it with some more carrot if you like, but I think we're going here. Do you use a microphone? Clear sound? Ha ha ha. CV-it? Do I use a microphone? Yeah, I use a microphone. I got a big fancy Rhodes microphone here. Does it sound? Is the sound terrible? I'm not sure if you're being sarcastic, CV-it. Is my sound not clear enough? Welcome, CV-it. I haven't seen you before. Welcome, welcome. Everybody say hi to CV-it. So this candle's not valid, and this candle's not valid. See that? It's run out of arrays. It's building candles, but it's not. They're not valid. We haven't done anything with them yet. We haven't got below this one, and we haven't got above that one. So those two are just sitting there waiting to become something. They're like little eggs waiting to be hatched. No, it's very good. Okay, good. It's good, bro. Okay, good. Where are you from, CV-it? Give us a little sprinkle about who you are, what you're about. Where do you live in the world? Lambo! Welcome, buddy. I'm long. I see more liquidity sitting at higher levels than lower. We shall see. I look around sometimes because it seems like you're right here looking over my shoulder. Yeah, I'm sticking to the 50.37 and the 9.50 NASDAQ short term. Oh, this is just a cluster. I can't wait for this anymore. I'm getting out of here. Cancel my order. Just look here right now, because this is just way too messy to be in the middle of. But I'm looking for this guy right here. Now that I'm out of it, watch. Sorry, I tried to tempt it down here, Lori, but I really think it's coming up. So if you're in this and you want to stay inside that consolidation, again, you've got to break through this candle here. And now you've got to get through this candle here. You've got to eat through the mean threshold of this one now, because it's been validated right here. So if it doesn't blow right through here right now and start driving for the low, here, I'll bring the carrot. Come on down. Come on. Give Lori some work here. Come on. Smell the carrot. Smell. Ah, damn it. It's like, screw you. Either give me a bite or I'm leaving. Mean threshold. Snap off of it. That's not what you want to see. You don't want to see it snapping off of that. It's just running these lows out one more time to push higher. Come on. Come on. Laura's like, leave the damn carrot alone. Let it come to you. Come on. You want to eat through, blow right through this now. You don't want these to be probes to go shorter, and it can't make the probe. You see, if we can't, we're trying to get these little probes down, and they're not making it, and they keep snapping off of it like that. That to me tells me that we've got resistance here. And then there's the more upside. I agree. It's way too messy for me as well. Probably will remain until tomorrow morning when we get the PMI numbers. 8:30. I agree. Yeah. Yeah, this is just a mess. Wrestling bears today. Haven't had enough fires lately? You need a little adrenaline, Lori, or what? Sorry, man. I tried to give him the carrot. I'm going to have to put the carrot up here now just to kind of put this thing out of its misery. Come on up. So you want to see now, this is kind of good that we've eaten through this order block. So to me, this one's really a no-show now. We've already come through it once. We've blasted through it. We blasted through it again. It has no validity for me. So look for this upside. I just want to see if this would have been a valid trade. So now we've popped into it like that. Now if we turn around and rock it back down. Oh, it loves the carrot. It loves carrot. So there's the mean threshold, right? Right there. So now we take the carrot, stick it down here. We want to see this hold. That provides some support. And I want to see it blast through here now. Now, a lot of you might be saying, oh, this is going higher and higher. I don't see a lot of going higher there. I just see inside this range here. If we blow through this, then yeah, you're right. And you can see rejection and these highs, they look tempting. But you have to blow through this right here. And right now, all I can see is it just bashing around inside this small little range. So unless we start getting some support off of this guy here one more time. Oh, no, that's a good thing. If we get support off of here and through here, watch how it reacts off there now. See how it's, yeah, see how it snaps off of it? That's the kind of thing you want to see if you want to look at that as, so my stop loss was going to be up here for a short. So you want to see it snap off of that like that. Wicks do the damage. Body's still staying inside our inversion. Okay, so now we've bounced off of this. See that? We tapped it. Now you want to see this one tap here. Who's going to lose now? Up here or right here. So this guy or this guy. There's the wrestling. You wait and see. See the tippy tappy off of it? We're reacting. Now, are we going to blow through it? And again, you watch the candle. If it's just hovering over it, it's a good sign that it's going to push higher. If it snaps off of it, then it's a good indication that we're going to go lower. So watch, again, when you're watching your candle, don't wait for the candle to finish and then analyze the candle. You can watch to see how it reacts inside here. See, now this is a good sign for further upside. Now I'm looking at, if that's your line in the sand right there, and we see a body close above that, rejection block. And again, don't get too excited because we're at this rejection block, remember, and we turned around and went all the way back down into the discount of that big range again. So if we come all the way back up into this, we could see a turnaround and come back inside this consolidation, and you notice how it's compressing. We'll see how this mean threshold holds. And I really like the fact that it's going higher. So I like you guys' idea that we've already bodies come through it, come back, found support at it. I'm with you guys now. Let's keep going higher. But don't get too excited. If you're long on this, pay the trader at the rejection. See how it's hovering there? It's not snapping off of it. Going higher. And that's just something you'll kind of look at for a while, and you'll start to get a feel for how they react off of when you guys get the PD arrays down and really watch how each candle has its own set of PD arrays. And then you watch, I'm looking at that PD array now. How is this acting off of that PD array? Is it just bouncing on it? I want to see it drive through it. I want to see it pull down hard. I want to see it snap off of it if I want to go down. So there's the rejection block. This would suck now if it turned around and went ripping all the way back down here for anybody who's long. But we do have a consolidation, return to consolidation, order block, return to order block, return to order block. Now you want to see this continue pushing back up. We've got the step starting to happen here now. The march out of all this chaff that's going on here right now. And you want to see this hold price if you're going up. If it doesn't, look back down here again. There's that whole damn thing we just saw rinse and repeat itself all over again. That was the fear, that it would just hit the rejection, not take the highs, keep going. My rule was body breaks, find support. I'm with you guys, let's go long, but be careful about here. Sure enough, it hit it. Now we want to see, now that it's blown through here, now we've got our break in market structure to the downside. All of our little trending buddies who like to draw trend lines on this shit are now about to get bamboozled. Because there's nothing really inside here that you can really trade to that hasn't already been worked, right? Break in market structure with a body, create a fair value gap in here, trade back inside it, and then get short. Does that make sense to you guys? I'm planning on NQ for long because it has come to its point in the 15-minute frame. I'm out. TK, you're out. Okay, buddy. So now we're back into consolidation hell, and we're saying now this was support to go higher, with the caveat that we had to get through here. Didn't work. If you're taking a piece off, always pay yourself at the rejection block, man. I'm not kidding you. Here's a classic example of getting the pain of overshooting your PD arrays. Each one at a time. We wicked all the way through. Body came up, finding support. Now do we come back into this order block here? So there's the fair value gap we just called for. Now we're looking for support off of this guy here. Do we have this? Is this going to maintain open now? Is this going to stay open and we're going to drive through here? Or are we going to come back, fill it, hit the order block, which is the breaker now because we have a run below these lows. This would be a breaker inside this fair value gap. No, not quite. But there's a, if we pop back up into here, tag the bottom of that breaker, roll over and come back down again, then you look for lower prices. So this is a valid order entry. 1, 2, 3, 4, 5, 6, 7, 8. There's 8 PD arrays above you. Premium discount. What do you want to aim for? Premium. So look for your breaker right there, right on the money. Bam, got it. Now watch, how does it react off that? There's one. Oof. All 3 of them. Now you want to see, you do not want to see it close below that. You want to see it snap off of that now. Start coming back down. Where does that close? Not a good sign if it closes through 3, then our ass is next. So wicks do the damage. Watch the body. Does it close inside there? Look at that. Right on the beezer. Love it. So wick did the damage. If you're trading, looking at your 8 PD arrays, your 8 different entries that you could have gone into, premium, you look for inside here. What's my premium? Let me show you here. 88% hit that on the money. Right inside here are 6 or 79% retracement optimum trade entry. If you're looking for the 8th PD array to key off of, premium didn't start till we got into here. 62% was right there. So again, you want to make sure that this holds now. If it doesn't, see how that candle now becomes the order block. We trade above it, come back to it here. So now you're between this guy and that guy. It's got to decide, where's it going to go? Are we building a higher run here? Rejection block again. Where do we close? And we're at 00, so this would be a turning point right here. Yeah, there's a lot of liquidity on the upside. All inside this breaker is liquidity, but we've already come back up to the mean threshold of that already up here. Now we're looking to work through this and start to, we've already had a candle trade back up into it. Now you want to see this, you don't want to see it revisit that. I wouldn't want to see it revisit the mean threshold again, or at least take out that high, unless, oh no, I guess let me rethink this here. Let me have a look at this. Okay, so we have fair value gap formed here. So this, logically, we could run up into here, retap that fair value gap one more time, and then drive down. So yeah, if this doesn't just hit right here and it's just tagging it and leaving, then I can see two scenarios here. If we go higher, look for a run to this old high right here inside that hourly fair value gap. And if it gives up the ghost, and we're looking for the 1 minute to show us which direction it wants to go. And right now it's supporting a downside run because we have order blocks that are being supported. We traded below it here, we came back into it here, and we're supporting downside candles, or up bullish candles. We're supporting them on the downside right now. So it's a downside run. So now we're looking for a run to back to the rejection block down here where the carrot is. Let me pull that carrot down a little bit lower so the tip of it touches. Oh, it's right back in here again, this inversion. See how you can get that? We've just had this multiple times repeat. We've had range, come back up. If you think it's going to take the highs, you get denied at the rejection block. Hence the reason you pay yourself. Then we have another new range. We drive all the way down to a discount, then drive all the way back up to rejection block. Do you get pain? Do you get some pain here? Oh yeah. You do not take out the highs, and we start pulling back down again. So that was the thing we're looking for downside, and we had to break that high. We didn't. So then you start to see order blocks forming. You see a break in structure to the downside. You go, uh-oh, there's an indication that we're tipping our hat to the downside. We come back up. We need to close above this mean threshold. It didn't. It wicked through it a bunch of times. Came back up into one more time, give us a slap in the face at the old rejection block, and then decide to leave again. So it's been doing this all morning right now, running back to the rejection, 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 and just keep on handing us some interesting fun today. Back to the here, see that? Right into rejection again, back into our fair value gap discount, ba-boom, right to our candle one more time. Okay, so now I want to see it take the lows. Lambo, Mike Tyson, that's right. Stop above 950. Oh, Lori's still in all this. He had faith that it was going to reverse. Good man. You're still in this short after the 10-10 entry? You must have had your stop loss sitting up here. Good for you. Now you can pull out that little peacock costume and just strut around the house. Oh yeah, oh yeah, I knew it, I knew it. Here's our carrot. That's good. That's what we want. That's what we're looking for. Lovely, lovely. More downside. So that breaker held. True to form. Took a lot of resistance, a lot of shaking people, trying to shake them loose. And continue down. So now we've swept the lows. So hopefully you took something off there, Lori, at the bottom of that low. Because now we're back to consolidation. So from here, I got nothing for you. We filled that fair value gap right now. So what I want to see is it pop through here with a close, come back up, find some support here. So this level here becomes the support. I want to see a body close in here, come back, find some support at that, which is this lows here, and then keep pushing through. So I got more downside here. So you can see how each candle we're looking at, where it starts to change up, we go, it's going short, it's going long, it's going short, it's going long. Well, we have to lose this in order for that. We have to stay inside these ranges. We have to lose this in order to get it. When we close above, there's an indication we're going to run. Well, now we have to make sure we take the high out. We're not just going to get another rejection block tag multiple times here. And if you were long, you should be paying the trader and moving yourself to stop loss to break even when you're in messes like that. See, now this becomes inversion. You see that? Body breaks through it. We come back up. Look at the support there. Anybody who's new here, if that's not telling you something, stick around. We'll show it to you again and again how important these PD arrays are. So we're still keeping in line with our, I want to see it blow through here now. It's got to get through all this lot. This candle here especially. I'm going to put that right on there. I'll put this over here as the downside objective today, somewhere around there. This is the difference between experienced and beginner. Yeah, you got to be watching out that you don't, if you're looking at these PD arrays that are way outside of what those are all predictions up there. When you start saying, oh, there's tons of liquidity up there. Absolutely, I totally 100% agree with you. But in order to reach that liquidity, you have to get something that supports a continuous substructure. And the moment it breaks structure to the downside and says, I'm done, and you go, wait a second, you should be asking questions right here at this break in market structure when we were talking about it. And then you have this inversion that starts to happen here, and we did not close above it. We just kept wicking. We didn't break above here. We didn't take out those highs. Those are the questions you want to say, is this still reaching for this? Or now if we got a break in structure to the downside, if we break this low again, that's another kind of, and again, we're doing hindsight here, but we were talking about this while it was happening. We get a body break below it here. Uh-oh, we have another break in market structure to the downside with a body. And what does it do? Comes back, tags it one more time, and says, now I'm out of here. So we have break in structure once, back to the order block. Break in structure twice, back inside the order block. And then unicorn kablasto. You see that? Once, twice, back, tag it right there, right on top of a PD array. We've been cutting through candles. Is it still tapping it? Well, that is on the money. That candle's high there is 83175. What's this candle's? 83200. So it just popped above that piece there into your inversion one more time, well, which was pretty much your spread. So yeah, lots of liquidity, but always say, am I still being supported in my upward track? And I always got to make sure I pay myself at these little points, especially in consolidated markets like this, because you can get, obviously, the old Mike Tyson, a flogging to the noggin, as it were. That's whole consolidation. The last hour was inside an hourly fair value gap from yesterday. Was it really? Oh, yeah. Right inside there. And now we're breaking through. You want to break through this now. Oops, I moved it. You want to break through this fair value gap on the downside now. Not just wick through it. You want to start seeing it really drive into here. So order block. We've got lots of new PD arrays to play with now. Lots of new PD arrays to play with. So 50% puts you here. And you got to state what inside here is a breaker, what inside here is mitigation. Like, oh man, what a mess. Breaker, run above old highs. That last down close candle, if we draw that out as a form of resistance, and I go breaker, let me get rid of this 50%. Inside this breaker, does 50% get us a retracement back into a premium array and still be inside this breaker? All the way up to the top fill. You could fill this right there, a full fill of this whole fair value gap here, and still be inside this breaker. So if that gives way and goes all the way up into here, look at the range, look at optimum trade entry, right around 62%. You could allow that to wick up there, take that right off 62 and continue down. Which I actually might take that, if that goes there. We're bouncing off of that inversion one more time. See the snap off of that. Now you want to see it keep coming down. Now you don't want to see it keep going up. Come on down. Turn into a bear flag now, or bear candle now. Fair value gap, 11.11. We come back, tag this, look for a run into here. This would be like a silver bullet at 11 o'clock. And is this the long into the 50% or into that breaker? Because we're already inside the breaker already. And the fact that we're not hitting it and smashing off of it tells me that we got some upside to go to. So now do you get in on this little silver bullet right here and push through? Definitely a mess. Good job, Mr. Smith, for holding on to that. Yes. Are you still in this, Lori, or did you bail out a bit? Did you finally get your piece of the action this morning? Did you get your close, or are you still in this short? I know OCT wants to trade this silver bullet. He wants to trade this silver bullet right now? Yeah, it did take out a low. It created a silver bullet. It would be a nice little entry. The short was too early. See you all tomorrow. Okay, TK. See you tomorrow, man. The lesson I got is to be logical or believe in the technical, not the illogical probabilities. It's true. You'll see you'll overshoot your PD arrays and you'll get your ass handed to you. Watch each one and keep your eye focused. And that's why it's hard to do this on a 1 minute, right? You got to focus on each PD array and make sure that if it gets broken, the more you practice that, you guys, the better your idea of when does my trade fail? When should I be asking the question, wait a second, this is not right. We have a breaking structure here. Wait. We didn't take out something here. We did take this out, but we didn't take that out. That's what we're waiting for next to get confirmation to go up higher. So all we're looking for is for this candle to hold price, and it didn't. It blew through it, and you go, ooh, that's not right. There's this swing though. Oh, and a body broke below it. And we were describing that as it was happening, that we had a breaking structure there. So now that becomes your important candle. That inversion now becomes important to you. Now you want to see it get above it, get on top of it to go higher. And if it doesn't, This is your line in the sand here now. And if it doesn't, if we don't get on top of the inversion there, now we're in trouble. If we get below it, and when you see it do this, and then you see it break the structure again, you think, oh, that's definitely not good. Then you have to start abandoning that idea of going longer, and really start to read the elephant changing direction, swimming back against the current. Anyway, I'm learning things as well as being logical, and the credit goes to you. Thank you. For what, I don't want to take any credit, man. I just want to show you kind of like what I'm looking at. If it works for you, keep it, use it. I don't have a cornerstone on this stuff. I'm just happy to help if I can. ICT is celebrating his anniversary. The rest of the week, he said, yes, he said he was going to stay out till Monday. He'd be popping back in again. So let's hope he does. No algo knows that ICT wants to trade the silver bullet. No, the algo definitely knows he wants to trade it. So where do we at? 18. This is an 18 candle right now. So this 18 candle should come into here, not 19. If not 18, look for 21 to come into here. There we go. Come on, 18. Let's put a little trade order in there for the fam damly buy along. And then we're just going to put a stop loss down yonder on the Chattahoochee. $19. So the next couple of minutes we should see a nice little run down into here, give us our silver bullet entry. And where are we aiming? What are we aiming for? I don't care. I'm just going to take a premium array that looks like a logical place for it to come for me. Just come back here and fill that. All this stuff up here looks totally delicious for a run higher. Now that we've filled this fair value gap, we've wicked down in here. Are we pulling back into this order block mean threshold? Right? No, it's mean threshold still right here. It's back to this inversion again. So here's 20. Actually, no, I don't want that. I don't want to take the... I want to go from here to here. I'm really going to pull it tight. One more minute, and we'll see if we'll get a reversal back into the silver bullet here. Oh, I don't want to see that. If that goes to that before we get here, I'm out. I won't even take the trade. So run the highs, run the lows, get back into our breaker. Or sorry, well, I guess it would be a breaker if we just broke that high. No, don't take the high. Forget it. Weren't going to give it to us. It's going for it already. That's okay. Didn't want to give us our silver bullet entry. If the 21 turns here, now I'm looking for a run down. We'll see if that holds right there. Snap off of that. See, we totally would have nailed that. Had that just come into here, that would have been a $500 handle or run right there. There's the 21 swing point. If it's not a swing point, then look for 27, 29. So you're looking for a premium, a much bigger premium array. Look for this dude up here again. And do we get on top of this breaker now? Remember I said it can run all the way up to the top of the breaker? Well, that's it. Right there at the top of the breaker. That's as far up as you can go. So either it's going to blow through it, or we're going to roll over and come all the way back down again. Right inside that big monster. So we have a leg, we have a power, we have a consolidation. Notice something different about this though. We have a leg that takes out the lows, then we have a consolidation versus a consolidation, a leg that takes the low out, comes above it, come back to it, blah, blah, blah. Remember that one? This time it's the reverse. We've got a leg that takes out the low, then we consolidate. You see that? Return to old high. So now we want to see this guy provides a level of support now that we've traded above it right there. Came back, tapped onto the midpoint of it, and we're off to the races. So do we, now I'm stuck between, does this thing provide a level of support, or are we inside this fair value gap here now and you're going to be banging off the support to go higher? We wait for this candle to get above it to find some support at it. Otherwise this candle here, I'm really stuck right now between this fair value gap high and consolidation lows and the last down close candle that runs these little highs out here. I guess it would be this guy here. We got to get below here now. Validate this candle. There's a little tiny fair value gap there. So your eye has to be tracking this stuff. You can see how much mental capital you can waste staying really frosty. You got to be on watching every one of these things that form to provide the level of support. So far our fair value gap's holding. Pop below here. There you go. Now that validates that as an order block. We're inside this fair value gap here. Hitting it, sticking on it, drive through it now. So if it drives through it, we're really literally between two overlapping ones, one here and one here. And also that big sucker you're sitting inside. We've got wicked below it, not a body. A wick, drove back up, through it, rejection, push down now. You've already eaten through this candle already. We validated it here, came back up, chewed all through it. Push, push, push. Get down in there, get a body below that. There you go, reacting off of this guy here now, and this little inversion right here. We'll see how those two react off of one another. See that? Wick through it. Come back up. Bodies are still respecting it right here. Really tight. Really tight. I'll be right back. inside the range, premium discount. Let's just follow through with this here. Order block. We didn't quite get our silver bullet entry. That's okay. We broke through. Body closes above. Trade back into it. Get support. Come back one more time. Find support. Order block. Break above it. Come back inside the order block body. Open nicely. Trade above. Come back. Equal highs. Come back to the order blocks. Equal high. Inversion now. Body breaks above it, right? We come back into inversion perfectly. I hope you new people are seeing this. Run back up to a premium array. We're inside that now. We still have that little dude up top there. That's too small. Wicks are all inside that mean threshold, or the consequent encroachment, I should say. Wick, lots of pressure down. Now, is this going to hold, or is this going to hold? Premium discount. What kind of array? So if we're looking inside here, inside this is our discount array. So that obviously makes our equilibrium and our discount. I have a little tiny one sitting right here. Start to march these across now. You see how you've cut through candles? It's still providing a level of support. Right off 75% of that range. We break this structure. That's the same kind of thing we were talking about over here when we had a break in market structure to the downside. This is the same kind of thing. Do we have a break in structure? Now we're supporting. Some people are saying, oh, we're going for these highs again. Well, what do we need to do to prove that? We need to continue to support price in this inversion. So you don't want to see this inversion give way. You want to see that provide support, and you want to see these order blocks hold price. There's a little inversion right here. I'd like to see that hold price. And we need to get through here. So I'm looking here. If we break that structure with a body, again, the body's the important thing. If we get a body below that, then I say to myself, nope, I think that might be the high here. Now, weird thing about it is this candle performs a high and a low. Order block, we validated it here, we've come back to it, found support, snapping away from it. So are we going to drive down some more, or are we going to give this guy to give up this one here to go higher? Because we still have not broke this low yet, so technically we're still going long. But look for these things. Is this now providing resistance? Is that order block providing resistance? Are we trying to get up there? And we're going to start to fail? Or are we really going to... Have we got more work to do in here? Well, you're overlapping a ton of consolidation. So do we need to be working here, or do you want to start blowing right through it? There's an inversion right here. You're still long. Let me get rid of this underneath here. Holding till yesterday's low. Ooh, look at you. Lori's just holding on. I hope you've been paying yourself. You've been nibbling pieces off of this, Lori, because it would suck if it came all the way back and took you out. Daily bias is down. I think so as well. All right, so daily bias. What's our daily bias? Really? You say the daily bias is down? You have wicks going through the fair value gap above and wicks going through the fair value gap below. This is not valid. This one's not valid. So you're really stuck between this candle and this candle. And you've hit that one and you've hit this one. Well, no, you haven't. Maybe. Yeah, I guess. You could say the bias would be, if you're looking for this order block right here, you really got to get through that fair value gap there, and really you're just banging through on both of them. So if it sits in the middle of this right now for today, I wouldn't be too surprised. I wouldn't say downward unless you're looking to finish that off. Then I see your logic, guys. Definitely. If you're looking for running through that daily fair value gap and you're running through this one, then I'd say your bias would be for the downside. For sure. Yeah. But you better get a change here, because right now you've got a march up and it's still being supported. So if this just wick comes down into here and you start coming back up into this range again, into this order block, then look for the mean threshold, which is still further upside yet. See, we're still supporting more upside. So I wouldn't go on a daily bias down just yet, though that would have been a great run for that low. Yeah, I'm sitting very neutral in here right now. No idea which direction to call that. Yeah, there's still a little piece down here yet to play with, but it has been worked all the way through. So you're just looking for support off of inversion and support off of here. So you've got support for a long here and you've got a support for a short here. So draw your midpoint. You're still sitting equilibrium between those two right now. And with a bias right now on the minute of going higher. Does that make sense? I hope it makes sense. Everything is up by NASDAQ. Hard to see that as bearish on the day. NQ loves to whip high and low. Yeah, no trade for me today. Yeah. I'd be careful, guys, because this is supporting an upside run right now. I don't see that as a daily bias down right now. I could be wrong, but that's okay. I hope I'm wrong. Hope you guys get paid. I'll try and tempt him with a bit of carrot for you if you like. This is one of those infamous, guess what, we're approaching our favorite thread, Mr. Rejection. And they turn around and slam all the way back down again. So far you've got structure, support, structure for the upside, support upside, support upside. If you break this to the upside, you're starting to look for it. After we start getting out of the rejection block, if you start breaking highs now, this would have been a beautiful silver bullet had we had an opportunity to get in on it. There's the rejection block right here. Now the next one's up here. 25, 50, 75, whatever you want to use on your wicks. We've already worked this mean threshold once, twice, so to me that's been eaten up. That candle's been eaten up pretty good. The likelihood of this blowing right through here now is much higher. Now you're digging really deep into that wick. And we're not snapping off of it. You see that? We're sitting in it. Watch how that candle is being worked right now. See that? It's not snapping off of it hard. It's coming up. It's pulsating on its way up. This is building a definite strong leg up here now. Support at this small range, discount array, old high, that should bring us to equal highs again. If this leg finishes off, there's an equal high there. So again, if we want to support downward structure, we want to make sure that we break one of these, or the back of this here. And if we do, there's a consolidation. There's the leg that breaks the consolidation. We run back to it, come into it, find some support at it. This would be our next support on the way down, because we're right up in the rejection block again now. So if this happens again and we have this big whipsaw on the way back down, Lori and Lambo are still in the play. Right now we're just finding support off these little wicks, equal highs here. You're gonna lose that high, that midpoint now. You don't want this thing to provide banging around inside here again. Pop above it, come on top of it. We've already traded through it once. Coming back to a logical 50%. Is that 50%? Probably not even 50 yet. Almost. Now if we blow through that, that's a good sign that we're definitely running higher. If we don't even reach the 50% of that return. I love that. Right up to the opens again. Make up your mind. What do you want to do? I want to see if my bias is right. Still stick to the 50, 30, 70S and 90 or 950. 950, like way up here? That's where your bias is, abs? Is right off in the midpoint of that? Ooh. Now you're talking dirty, my friend. That's very sexy right there. If we're going higher, I like your the color of your fabric, my friend. I do like the color of your fabric. 17.95. Yep. If this continues up and we take this high, then definitely I'm on the same boat as you. Hit my stop, break even. Oh no. I hope you got to trade up. You got some money out of that, Lori. I hope you got some money out. Entered a long short term. If I were a betting man, yes, just took out the lows of the day, and now I would be taking out some highs. Consolidation. So what's going on inside your mind when you see consolidations? Consolidation. You want to see a breakout above, come back, find some support at the highs. Does this provide support? There's our 50%. I think that was our 50% mark right there. Now snap off of that and go higher. I'm swimming in the water right now. I could either jump in the boat with abs and go long, or this could just roll over again and come back down into this little pocket down here. I want to see a bold candle come through here now. If this is a short from here, because we just went into the rejection, we didn't take out the highs. It's the same thing we were talking about back there. We want to see a body get above his to continue going longer. Otherwise, this is just inside the range again, hitting the rejection block, which it's been doing all morning, and turning around and coming back. This is like saying, how many times do I want to show you the same thing? Hitting rejection, hitting rejection, hitting rejection, over and over and over again all morning. It's been doing this. Rejection right here. It's not taking out any highs, just rolling over. Now, our important thing is this little tiny guy right here. Not that I would get a lot of love and support off of that, but we've got a body traded below it now. I'm really between here and here. Premium discount. You want to start. You want to come on. Lori's going long now, so let's stay long. Don't turn around on me now. Maybe I should put the carrot up here instead of it's being tempted. Yeah. So if we have a big bold candle coming down here, I want to see a big bold candle get down here, come back up, create a fair value gap. That's what the next 2 minutes I want to see. Break in structure. If we get a body below here, break structure. Create the fair value gap here now. That turns into a fair value, and then I'm going to move this thing out of the way because it's been beat up pretty bad, so we're going to move it over here, and we're going to start looking at that one. You get a body below here. Close a body below here, just a small body, be fine. And then the next candle opens up and comes into here. If I were a betting man, I would have it stopped out, break even. Wait, see what happens now. Oh man. Sorry, buds. So now this is what we want next is this to come. There you go. There's your fair value gap. So that's formed. Next thing we have a trade back up into this. And because I've been calling it, I have to take it short. I have to trust myself here now and just say, if we get a trade, and I want a big juicy one, so I'm going to go right to the midpoint of this. Oops. No! Damn, I hit the wrong button. See that? Crap. That's going to come all the way back up there yet. Dagnabbit. I hit the wrong button. That's what I wanted to hit. I did the wrong button. You saw me pooch that one. I screwed that trade up. Let's see if we can get out of it real quick here. Ah. I might have to weather this. So we have a break in structure. I had a chance to clean it out right there. So stop loss has to go above here. That's a big freaking stop loss. Oh, I gotta get it up there. I think we're going to have to take a big loss on this if this takes me out. And my take profit's going to be right here. If I take that low, I'm closing that one out. Breaker. This may be holding price right here. Yeah, pretty much stuck that right on the 50% Lambo. You see that? That was the wrong place to put my trade in. It could go all the way back up. Now this could be a nice new banging price leg higher. Actually, I'm going to take this one out. And I'm going to move this sucker down into here. I want this breaker to hold price, so I'm going to go just above there. That'd be nice if it just stayed open now. I don't like this. I might just close it out. I'm definitely in the wrong spot here. Right in the middle of the range here. What a stupid place to put a trade. That's the objective here. Discount array. And I'm going to slam this sucker tight the moment I get an opportunity. or I might just bail out. The smart thing is to bail out. This wasn't an intentional trade anyway. Get below here, that becomes my order block. Stop loss will go here. If I'm wrong, I'll take a slightly less one. But this, I want this candle to get validated below with a body. There we go. It's not, I'm not going to give you it right away, Darren. Although I'll take a couple of bucks, get out of it. So this is the mean threshold. I don't want to see that give way on a close. Rejection again. Equal highs. Oh, damn it. Yeah, it's going higher. Crap. Can I add a couple of bucks? Now I take a loss. Mean threshold closed above my mean threshold right there. Order block, support off the order block, going higher. Now this is the one that we were looking for, the ideal entry. What did it get right there? Now if we have a body close above this, then I'm out. And I moved to the side. It's 12 o'clock here. It could take out the highs before lunch. Gonna take the highs for lunch. Seven seconds. 5, 4, 3. Oof. Look at that. Jeepers creepers. Come on. This is the indecision. I'm looking at 50% of that wick. I'm gonna get out. I'm gonna get out. Taking small losses today. Gonna give back all the damn. What time is it? 10:01, 10:02. So we got a turn point here anyway. This is where it's going to come back down. It's the turn. It's the turn. Right back to the order block. See that? 2-minute order block. turn point, 00. Fuck. Oh well. How's that for psychology of wrestling with your own brain again, eh? And it didn't violate my rule of a body above, but I got so much in my head, doubting myself. That's a good psychological game of doubt. Beat me out instead of my rules. Now what I need to do is just kind of rub that in by driving all the way down to the objective I was looking for down here. And once again, we see the damage of negatively feeding your brain for years of beating yourself up, doubting, instead of trusting your setups. Body trades below it, right there. Trades back to it, right there. Continue down. Blow through the midpoint here. You need to close through the midpoint of this to continue down. You got that up close candle. You've traded all the way back down to, I guess, a breaker. These little highs. You come all the way back into the mean threshold of that. So you're between this candle here and this candle here now. Yeah, price action's bouncing around, man. It's consolidation time. You can show you how you can get beat up in it. You can still read it, but it takes a lot of mental focus in these kind of environments for sure. So we're back up to the order block, almost touching the order block. Consolidating again. Premium, discount, all the way down to discount, all the way back up to premium. Come back down. You want to see it either, these two candles aren't even valid yet, so you're really stuck between these two. In your consolidation. Yeah, the liquidity above looks super juicy. It looks like it's just going to bang around in between these two fair value gaps in the middle here, which would be right about there. So that's the equilibrium between these two fair value gaps here is right in where we're sitting right now. So you could just see the rest of the day bang around in here, up and down, side to side. And then you have to ask yourself, where do you want to go from there? To 950, or fill the rest of this daily inversion one more time, or daily, yeah, it is an inversion now. Are we finding support at it? You're finding support at the midpoint of that? If I had to look at just those two things there, and I had a 50-50 lean, I put 51% on a long versus a short. Just because the mean threshold of that held, and this we blew all the way through it, and we still have yet to hit that one there. But if this is just a run out, and then this is a run out, that candle's high is the downside objective if it is to happen, which is down here. That's doable for 1 o'clock, for sure. It's so hard to call that right now, up or down. That's not too far outside of the range to finish off an objective for taking out 11 o'clock low. Lunch doesn't take the high. Or does lunch take the high? Because there's a ton of liquidity that it just did rejection blocks all morning. Rejection went lower, rejection went lower, rejection went lower. Again, rejection went lower. We're not doing rejection off of here though. We're just coming back into a 2-minute breaker. Premium. We're at a premium array there. Reacting off of it. Back down into a discount array. If you're between these two now, that's your, where's your premium and discount? Well, you've hit your premium. You may still have a little touch of it left up here. We'll see what this midpoint provides us. There's a little small inversion sitting right in here, which is what we're banging on right now. You're out of here, Lori. I'm done for the day. Price action is too indecisive. I agree. It's all over the place, man. That's like being on a cheese grater, just raking you back and forth. It's fun calling it, though. It's fun trying to call that. It's good practice. I like days like this because it's really good practice for monitoring your arrays for sure. Daily's a little candle. E-mini is daily is just a little candle body with a wick high and a wick low. 1 hour chart. I'm doubting any of us would want to trade. Lots of wicks, very small bodies. Market is in a holding pattern for ES until tomorrow morning. I'm anxious to see this afternoon how it decides to set us up for tomorrow. Yeah. Yeah, because you think about that, Derek. Right now we're sitting right in the middle of these two arrays. Like, are we finding some support off? And this order block here has been hit. This order block, I guess, has been hit on with this down close candle. We ripped all the way through it, but it's not valid either yet, and this candle's not valid yet. So these two candles are not in play yet for me. So I have to go back to these, and we're in an extreme premium array out of that big range right here. You know, yeah, I'm literally looking at arrays. I'm not even looking at so much candle anymore. Until we get through that array, then we're looking for that mean threshold. But otherwise, we've banged off this order block here, but the bodies are respecting the open. Wick did all the damage. Back up, down, support off the order, off this daily fair value gap. I would expect this to start pushing higher. Oh, okay, here we go. Breaking structure here. is good. This is good. Get going. I hear abs starting to go chanting now. Abs, abs, abs. Let's go. I think I'm going to say, abs, pull me into the boat. I'm done swimming. I want to go along. I want to go with you. I want to go with you. It's like Titanic. Don't let me go, abs. Don't let me go. Which would put us right up into the bottom of that fair value gap again. That's a good sign. We have a break-in structure to the upside now. We have our break-in structure, gentlemen. Okay, now we got this guy broken. We got a wick. Let's get a body. Come on now. There's a body. Look at that, finding support at the inversion. Look at this. Body breaks through, comes back, finds support at the inversion. But who would have taken that, right? But if you're trading just by pure rules alone, you could have got long there, go long there. Again, you're paying for a premium though. Oh, Lori's still here. I fully understand one thing though. I see why after 11:30 it's best to close the charts. Oh yeah. Yep, yep, yep. You start getting into that lunch hour, it starts getting messy, right? Retailers making their downtrend line. Oh hell yeah. For the year I've been going past 11:30, the market always has a little to no opportunity. Yeah. It's not till the afternoon, around the 1:30, 2 o'clock range, that you can actually see if you can find anything. Banging around after 11 o'clock, I think 11 to 11:30, the retracement for the 10, the range that occurs at between 10 and 9:30. So here's 10, there's 9:30, right? So that range between 10 and 11, there's a 10 and an 11 run. Oh, it's not working here. I was going to say usually between 10 and 11, there's a 62%, 50 to 62% retracement between 10 and 11. In this case, it literally ran down, took out the low at 10 o'clock, then proceeded to come up higher, retrace back into this range here, probably is a 50% or more. Let's see this one. 50%. That range, 50%. Now we got an order block. Nice, popped above it. This is a good sign, folks. There's a silver bullet entry. 12:12, lunch hour. There's a silver bullet right there on the lunch hour run. That's a silver bullet right at 12:12. But if you've been beat up enough now, you go, I'm not touching this. I've been beat up so much all day today. I've had enough. I'm not playing anymore. I'm going home. Breaker. See that? Breaking structure. Breaker. False leg down. Come back up. Come back into the breaker to go long. That supports price for a long. I'm going to go long. I'm in the boat. I'm in the boat with abs now. Even though I'm paying a premium price, I'm paying off the breaker. My stop loss will be like I want to see this breaker hold price now. And I know I'm in the middle of lunch hour, but I want to see this steadily climb now. Start taking out these highs. Give me back some of my losses today. I'm going to put the carrot up here. Give me some temptation. Come on for the carrot, my friend. Come for the carrot. I'm going to celebrate it right with abs today. I'm going to go and celebrate right up there with him at 950, just short 947. I see if we can hit the 863. Come on. It's tasty carrot. Have a nibble. Have a little nibble. Come on. Have a little nibble. It's tasty. It's right off the bottom of that order block again. So there's the fear that it could just stop here, turn around and come back down again. Oh, that's the problem. We got the carrot around the wrong way. Oh, no, that's right. Oh, you gotta put the nibbly part of the carrot so it wants to. There you go. I'm getting tired. So you want to see these provide support now. You want that to be a propulsion candle. I like to see that stay open. But if it comes back to there, it's fine. I like to see that become a propulsion candle now and start really moving this baby up here. Veggie, veggie. I want to see it start blowing through that level though, not sticking on it. I want to see this candle give way. I don't like the fact that we just keep hitting it flat. See, we're inside this fair value gap here now. We filled it. I want to see it pop up above it. Get a body above this, support this order block. Let me see a big candle here now. Start pushing. Good. That becomes a valid order block now. Now this right here, right there, I don't want to see that low get taken out again now. If it does, I'm out 15 bucks and I'm moving to the sidelines. We've hit that bottom. That's it. If it hits it again, I'm still in, but I don't want to see it come through here again, this order block. I want to see it whole price now. I don't want to see it close below there. That's why my stop loss is pretty much break even. Yeah, see, I want to see it get above that. That's not a good sign. Not a good sign. Now it can go up because I just took it out. Take back a couple of bucks from my losses. This was off of this breaker here, FERBA. We have a breaking structure to the upside with a body and a fair value gap. We entered in right here off the bottom of the fair value gap, off the breaker here, and you want to go long. I don't like all this kind of waffling back and forth. I want to see something get out of here. I have my stop loss sitting down here because I figured this order block, if we lose the mean threshold on a close, and so far we haven't, I got skittish again and took out for a small profit, 50 bucks or something like that. And I'm aiming for going higher. So once again, I played chicken. I flinched, and it did not close below me, and now it's taken off. So had I stayed in the trade, we'd still be profitable, but I'm tired. I'm not making it. I see it, but my psychology is chicken. That's a fearful trader, man. Man, there's a lot of psychology to undo. Even though that I'm saying if we close below this, I'm out, and we're closing on it. Wicks do the intimidation. Should have just left it alone, walked away, but whatever. There's a couple of times today that's happened. This is the part where you can reinforce negative thinking. I could beat myself up here for not staying in this and not trusting myself, right? But then it's just more negative thoughts. I got to celebrate the fact that I called it right, called the entry, called my trade on where I was willing to let it fail at, and it literally came right on top of me at my fail point and poked down. All I saw was bear candle, and that's all it took right there just to freak me out and make me self-doubt myself. And it came back up close and said, haha, got you, and left. Should have trusted yourself. But now I have to celebrate that that was a correct thought after all. That was laser precision. I had an excellent exit strategy with the stop loss really tight. I had a $15 stop loss and didn't want to lose the 15 bucks. Didn't want to lose that trade plan. Didn't trade the plan. Because right now I'd be in profit. This would be a zero stress trade right now. Had we broken that high, it would have been like bang, right into that candle. Because you want to see this breakaway gap support price now. This can fill. Second, two fair value gaps in a row. Take the second. Even if it comes back and tags this high here now. Sorry, this low. And continues on. Our carrot is still up here. I hope that explains it for you, Furba. Good for you, Lambo. Good for you, man. I certainly hope Abs is in along here. My psychology pushed me out of the boat, Abs. I'm watching you sail off into the sunset, my friend. Got in at 50221. Oh, you're in the E-mini S&P. Is that where you're at? You got in down here? Man, good for you. Abs is a whale. He's all sitting there all nice and quiet. Return to the break or this consolidation. He gets in here. And he's been sitting long on this for a while. Good for you, man. He's the silent whale, that guy. Just swimming off nice and quietly. While we're all kind of chasing, looking at candles, he's off swimming with the whales. Good for you, man. I was reviewing a video of Michael's in a silver bullet trade with 50% of the new week. Opening gap was his target. Okay, folks, I think that's going to be it for me. I hope everything pans out for you, Abs. I'm looking for. I really like your mean threshold of 1950 now. For the end of the day, at least, if not until tomorrow. Look for that inversion fair value gap hit there on the daily to give you some more support. But other than that, I'm going to go have some breakfast, get some more sleep, because I didn't sleep well last night. So I am out of here. I love you guys. Thanks so much for that. That was a kind of a fun, choppy kind of day. Trying to play inside that. Abs, congratulations on your trade, my friend. Good job. Well done. Good entry that you had there, and nice hold for higher prices. I love it. It'll give you your 537. I'm almost sure it's going to give you 537. Where is 537? Ooh, yeah, right there. 536, 536.50, 537. Yeah, I'd go for the fair value gap. Make sure you take a piece off at least the fair value gap at whatever that candle's low is, which is 36.25. It may just blow right through that for you. That will become the new inversion to look for on the hourly candle for sure. Are you managing your stop loss from the back end? So you're managing this on the back end on the way up? Watch all these probes, that this doesn't just turn around into a wick down candle. Keep going, man. Seven more handles to go. If you're on our Telegram channel there, Abs, let me know. Well, I'll know. I'll see. I'll have a look later on today. I'm cheering for you, man. I hope it all goes out well for you. And thanks again for you guys popping in. I really do appreciate your spending some time with me today and every day. I really enjoy the camaraderie, and it's great. It's awesome. I love it. I love it. I love it. And I will see you guys tomorrow, and I wish you all the best. Be safe out there, you guys.